Hello and welcome. This is KYC. Now, in this show, we actually take up one single company every single day and we discuss the ins and outs of those companies. We talk about how things have panned out for the company in the past few years and what we can expect going forward. Well, the reason behind this is, well, we often have investors who are bombarded with a lot of information, but what we intend to do is, well, simplify this information which is out there in the public and bring in the most important details at the fore, and we'll discuss this with the managements and the analysts on the street. And today we have with us yet another very interesting company, and that's Varun Beverages. As well, some of you may know, Varun Beverages is a name very closely associated with PepsiCo, which in fact is associated with the company since the 1990s, so it's been a while. And it's one of the largest franchisees of PepsiCo in the world at the moment. With the way things stand, Varun Beverages not only distributes but also packages products for PepsiCo, and this is of course in the soft drink space, the non-carbonated as well as carbonated drinks, and these products of course are sold under the trademark of PepsiCo. Well, moving on, in terms of some of your key brands, of course this includes Pepsi, 7up, Mirinda, Mountain Dew and Tropicana in the juice space, but even beyond where it's looking at club soda, packaged water as well as snacks. Varun Beverages itself also has its own personal brands. So among them, you also have some of your clear names which would come up for you on your screen in just a moment. And there you have it. So you Refresh, Reboost Energy, Aqua Clear and Cream Bell. But, as usual, what we do in every show is that we take a look at some of the key parameters in terms of the performance of the stock, the company. And we'll take a look at something like the income statement. We talk about, the balance sheet, the cash flow statements, the key return ratios, among others. We also talk about shareholding patterns, as well as the outlook of the company, valuations, of course, and street coverage. And, right at the top, to take us through some of these aspects, let me also get in my colleague Mahima, who's going to help us, give us insight when it comes to Varun Beverages and how things could pan out. As usual, and we start with the income statement. So, Mahima, welcome to the show. Let's start with how things have panned out in terms of growth for revenue and profitability for Varun Beverages.
Right. If we consider 5-year CAGR for Varun Beverages,
yeah,
all three parameters, that is revenue, EBITDA and net profit, have grown in double digits. To talk about revenue, the 9 months calendar year 24. First of all, before we start with the parameters, just to clarify, Varun Beverages follows calendar year for their financial accounts, which is why they follow January to December when it comes to making their financials. So in terms of revenue, the 9 months calendar year 24, the revenue stood at 16,300 crore. The 5-year CAGR for revenue has been 26%. EBITDA for 9 months was 4,100 crore, and 5-year CAGR for this company has been 29%. EBITDA margin stood at 25.3%. But the interesting aspect of net profit, the net profit stood at 2,400, but 5-year CAGR for net profit has been a whopping 48%, which is quite significant for a company like Varun Beverages, because they also, are capex heavy. So maintaining net profit CAGR of 48% is a significant aspect, and that is why we've given a thumbs up when it comes to, the income side statement aspect.
Sure. And as one of the main reasons behind the slightly larger profit expansion is, the slightly faster movement in EBITDA as compared to revenues over the last 5 years, as you can see on the screen there. But I'm going to talk about the balance sheet. And in terms of the balance sheet, surprisingly, given the kind of cash flows the company generates, it still has a gross debt, a considerably higher gross debt. So firstly, when it comes to its net worth, as of the first half of this calendar year, its net worth stood at around a little less than 8,600 crores. It did have 6,300 crores nearly as gross debt, and even though its cash in bank stood at around 212 crores, that's not substantial, which means that at this point in time, its debt to equity ratio for a stock which is in the consumption space does look a tad higher at around 0.8. But again, this is into distribution, and it does seem like at the moment there isn't a huge challenge when it comes to your interest rates working against profitability, which is why we won't give it a negative rating, but we'll give it a neutral rating as far as the balance sheet is concerned. But Mahima, let's talk about return ratios then.
Right. The trajectory of return ratios for Varun Beverages has been quite impressive. If we consider the timeline from 2021 to 2023 in terms of calendar year, 2021 the return of capital employed stood at 16, which has improved to 27.8 in calendar year 2023. In terms of return of equity, which stood at around 18.3% in 2021. Goes to 34% in 2023. So both are both the parameters of ROCE as well as the return on equity have improved by a significant it has shown a significant improvement, and in terms of both of these parameters they are above 25%, which is a good indicator for a company like Varun Beverages. So we've given a thumbs up when it comes to return ratios.
Well, so a thumbs up and also improving return ratio. So that's certainly a positive. But let's talk about the cash flows and then. And in that case, in terms of cash flows from operation, it's a positive picture. We've seen about 2,300 crores coming in the first 6 months of the calendar year 24. Even in terms of calendar 23, that is of course financial year, we've seen cash flows from operations standing at around a little less than 2,400 crores. On a net basis, we don't have too much going in or out. So it's a very neutral sort of movement as far as your net cash flows are concerned. But we must remember that the partially negative cash flow is also on account of its recent acquisition of Bevco, and because of that, well, these investments will eventually lead to a little bit of an outflow on a net basis. Hence, and on an overall concern, we're going to give this a neutral rating, given we still do have positive cash flows. But then, as we move forward, moving beyond just the financial statements, let's, Mahima, talk about the shareholding as well.
Right. So in terms of the shareholding pattern, we've seen a slight dip in the promoter holding when it comes to the December 24 aspect as compared to September 24. Promoters have slightly diluted the stake from 62.7% to around 60.2%. FIs, on the other hand, have also sold some stake in the company, where we've seen they've in fact increased their stake in the company, where it was 24.2%, it's increased to 25.3%. The DIIs have also increased their stake from 5% to 7%, and public overall holding has come down by a bit from 8.2% to 7.5%. So overall, promoters did dilute, some stake in the company, but it's remained over 60%. So for now, we've given a thumbs up when it comes to the shareholding pattern of the company.
Okay. Well, from there on, let's talk about the street credentials and how the stock has done. Now, it's been a tough year. We do know about that for the broader markets in general, even for our large caps as well as the mid cap companies. On a year-to-date basis, and that is calendar year-to-date basis, and this is only January, the first 15, 20 odd days, with the first 15, 16 odd days. Well, Varun Beverages has come off by around 11.6%. That is not too much of an issue, but in the last 1 year, it has advanced by around 13.6%. And the reason why this may not be an optimal performance is because while we have seen a significant correction in your mid-cap and your small-cap indices, even in fact something like the Nifty 50, which is corrected about 11-12% at the moment, well, Varun Beverages seems to have underperformed these returns on a 1-year basis, notwithstanding the huge 761% return over the last 5 years. So there is no doubt about the fact that there has been a big up move there. But a lot of that, has slowed down quite a bit in the last 1 year, which is why we'll give this one a thumbs down rating. And that brings us to why this could potentially be the reason that one of them could be valuation. So Mahima, why don't you take us through that one?
Right. So despite the slowdown in the kind of stock movement, the valuations still don't look cheaper for something like Varun Beverages. In terms of the current PE, it is currently trading at around 89 times. This is the 12-month trailing PE, and the price to book stands at around 26.5 times. Now, in terms of the Bloomberg estimates for FY25 and 26, the PE goes to 71.5 0.5 times 25 estimates, and 26 it goes to 56 times, and price to book goes down from 26.5 to 17.1% and to 13.1% in FY26 as per the estimates. But even if it goes down to 56 times and 13.1 time price to book in FY26, I believe that the valuations still look expensive for Varun Beverages. Now, moving on to the analyst recommendations, in terms of what Bloomberg suggests is that in terms of buy, hold and sell, there are 22 buys and 3 holds from overall 25 ratings, and the return potential for 12 months, for the next 12 months, is around 27.3%. So despite the kind of stock tanking that we've seen in the first 15 days, Bloomberg analysts still anticipate a 27% jump this year. But this 27% jump, Agam, is not going to be as significant as the kind of rally that Varun Beverages has witnessed in the past few years.
Okay, so there you have it. And let's then bring what the overall score for Varun Beverages could be. And at the moment, while we've seen a very strong, show for the income statement, a pretty reasonably set balance sheet, return ratios on the positive cash flows as well, currently on a neutral stance. Shareholding, it's a well-held company. I guess the challenges are when it comes to the returns that the company may have given in the last 1 year. Valuations certainly on a sticky wicket, and street coverage based on that, again, something that could be a potential concern. The question really is that, and actually I'd want to go back to just the analyst recommendations, because that's actually a thumbs up. It's not a thumbs down,
yeah.
because it looks at a return potential of 27% upside from current market levels. So if you consider all these factors, you're looking at a score of 5 out of 8, and that's certainly not a bad rating as far as Varun Beverages is concerned at the moment. But the real question is that as we move on, let's talk about the handful of other parameters as far as Varun Beverages is concerned. I'm going to talk about strengths and weaknesses. And at the moment, we do know that among strengths, it has a strong execution, led growth. Company has significant market share, specifically, and considering it is one of the biggest partners to PepsiCo at the moment, even in terms of existing international markets. And there is a reduction in debt, sure, and investments in growth opportunities that potentially could play in favor of Varun Beverages, but the debt still is high, and hence that becomes a double-edged sword. In terms of weaknesses, pardon me, it is the exact same thing here as well. But we are also looking at the prices of it in this case, which could potentially adversely impact margins. And we're also looking at the gross debt, which has increased significantly over the last, I would say over the first half of this previous financial year, and that is something that could weigh on the minds of investors, because that impacts profitability. But Mahima, let's talk about opportunities and risks as well.
Right. So in terms of opportunities, the first opportunity that Varun Beverage can leverage very well is the quick commerce space. The quick commerce, we've seen how it's grown, in the past 1.5 years. So the distribution strategy that Varun Beverage has to adopt should be more towards the quick commerce space to augur growth. Now, in terms of the other opportunity, they recently acquired business in Africa, where they're trying to kind of scale up their business in terms of the snacking business, which has a revenue potential of over $100 million in the next few years. So this is one of the biggest opportunities that Varun Beverages can leverage in the next few years. In terms of risk, now recent debate between Campa Cola and Varun Beverages brands has spurred up the market. We're seeing that the heat from that kind of competition is coming in. Campa Cola has gone in with a predatory pricing policy, which is kind of adopting pricing which is much lower than what Varun Beverages is offering, and which is why there is heat in terms of competition, and they're going big with respect to advertisement of Campa Cola as well. They did advertisement. They did advertise Campa Cola in Mahakumbh also very strongly. So this could be one of the potential risks. And secondly, Reliance is also entering into rehydration category, which has been kind of a strong suit for Varun Beverages. So this is also one of the risks on the counter for Varun Beverages.
Right. So, that's as far as your strengths, weaknesses, opportunities, and threats are concerned. Before we get in an expert opinion, I just want to delve into a handful of other parameters because it'll just enhance our conversation accordingly. So, I want to talk about the recent updates, and one of them, of course, is its expansion in South Africa. In fact, it's invested about a little over 400 crores in a South African-based subsidiary, and this is SBC Tanzania. But they're also looking at other expansion in Africa, and SBC Tanzania specifically, where it's made that acquisition for about another 1,300 crores. And moving on, we have an expansion in Ghana as well, where they have made a small acquisition about 127 crores. And let's not forget, it's looking to further expand its footprint in a lot of these markets, and which is why it's the traction that it gets from these markets becomes a little bit more important. But it's going to be a wait and watch. These are high growth markets, but they're also relatively volatile markets, and not without issues when it comes to political regimes and changes in there. But in general, of course, these are some aspects that you need to keep in mind. But Mahima, can we also talk about what's working for the company so far?
Right. So a couple of things that's been working positively in favor of the company. The first one is as you rightly mentioned, the expansion in the Africa business, which will kind of increase their snacking portfolio. Their successful acquisition of Bevco is also something that will augur growth for the company going forward, and a lot of brokerages have come out and affirmed that. There is they are kind of expanding their distribution network, particularly in rural areas. We're seeing that the rural demand is picking up. So expanding the distribution network in rural areas will also augur growth for the company. Boosting manufacturing capacity with brownfield and greenfield expansion, of course, to meet the demand of their products, and expansion of their high margin Sting drink is something that will also kind of expand their margins going forward. So this is also one of the factors which is working for the company. And recently the company also did come out with its QIP, where they raised 7,500 crore, after which they announced the acquisition of SBC Ghana, SBC Tanzania, and also Lunamec Tech, where they'll be acquiring further stake going forward as well. So QIP raised will be used probably for debt reduction, expanding the snack business in Africa, and also capacity additions in India. So all of these factors combined together, will work in the favor of the company going forward.
Right. Okay. So let's take this conversation forward with an expert here. We have Sudeep Bandapadhyay. He's the group chairman of IndiTrade Capital, who joins us on the show. So, Sudeep, good afternoon, and thank you so much for taking the time out. At the outset, if you could tell us about what you're making of Varun Beverages at the moment. Mahima and I have discussed quite a few factors, but from your perspective, in terms of the insight that you can give us, where do you stand on this particular company?
Well, I think I'm positive on this counter. The company has a significantly good track record as far as efficiencies and performance is concerned. And they have, over a period of 5 years, I think you guys highlighted that, rewarded the shareholders handsomely. They also have a track record of successful acquisition and, bringing out efficiencies from acquisition. So two things I want to point out. One is, of course, a great opportunity. The other is a bit of a threat. The opportunity is in Africa. I think the acquisition of SBC Tanzania as well as SBC Ghana provides them with significant opportunities, but different. SBC Tanzania is a very mature business with 50% plus market share in that particular geography, as well as pretty good capacity utilization. So the way they have to work there will be completely different vis-a-vis Ghana, where the market share is about 13%. So there is a significant potential for capacity and market share expansion. The capacity utilization also in Ghana is very, very low. So they need to take it up. So Ghana is definitely a significant opportunity. And Tanzania is a mature market where they have to introduce newer products and extract more value out of Tanzania. So this African business acquisition and African business should give them significant upside going forward. Immediately the next quarter, there may be a little bit of challenge as far as EBITDA and profitability is concerned because of this acquisition. But I think that's par for the course. They should not be perturbed too much because of that, because eventually this is going to give them fantastic results. The challenge, I would say, is what has happened with the Bhartiyas acquiring Hindustan Coca-Cola bottling company, significant stake. And we have to remember that Domino's, the chain, was having PepsiCo, which was Pepsi drinks, which was being, in Varun Beverages territory. So there is a possibility of Domino's chain going out of PepsiCo usage of Pepsi drinks. So this will definitely have a little bit of a challenge as far as Varun Beverages is concerned. And we'll have to wait and watch that space. It's not a certainty, but there's a definite possibility. And that will have to be handled by Varun Beverages at some stage or the other. So these are the main opportunities and threats as I look at it at this stage. Overall, we are positive. I think, valuation is not cheap, and valuation is not going to be cheap in this space. And of course, there is competition from Reliance through Campa Cola, but I think they have handled Coke competition and they will continue to handle Campa Cola competition as well.
All right. You've said that they will hold against the Campa Cola competition that's coming in. That was the answer I was looking for. That was going to be my next question. But overall, I want to understand, Sudeep, with respect to the kind of distribution channels that Varun Beverages needs to adopt, and kind of make sure that quick commerce is the channel that is going to augur growth for the company. How are you viewing that? How are you viewing the distribution strategy? Is it well aligned to make sure that it's kind of coping up with the kind of quick commerce picking up that's taking place?
Mahima, I think you have to see the company's track record. They have efficiently handled all challenges over the last 5-7 years, and they continue to handle challenges very well. They are nimble, they are efficient. Every acquisition they have done, every new challenge which has come, they have handled pretty well. So the execution has been strong, and I continue to believe that execution will be strong. So quick commerce, as you rightly pointed out, has been an opportunity, and it will remain a significant opportunity to expand their margins. That's the way I look at it. Probably the traditional retail channel, the kind of margin they have been giving, the quick commerce margin may be a little different, and they may gain out of this quick commerce expansion. So I'm also positive as far as quick commerce is concerned, and as far as Varun Beverages vis-a-vis quick commerce is concerned.
Sudeep, given the current environment, given the kind of demand, or rather the lack of demand, or rather slack demand, I don't want to use extremes here, but because of slack demand, do you think that pricing could be a concern, at least in the near term, over the next 2 to 3 quarters? And do you think that could dampen, perhaps to a certain extent, the top line, and maybe partially erode away a little bit to the margins?
Well, that's a possibility. We can't rule that out. Yes, there is a challenge as far as demand is concerned, and that is getting reflected in pretty much this entire consumption space. So if there is a significant challenge on demand, the pricing may come under pressure, and they may have to reduce price. Also, the Campa Cola, we touched upon that. The challenge, if it becomes big, it may reflect as far as pricing is concerned also. So yes, there will be a temporary disruption in terms of pricing, and that will lead to EBITDA challenges. But to my mind, this is going to be a temporary phenomenon, and we have to look at it that way. Now, if you're looking at a couple of years plus kind of a horizon, I think these will be minor issues which the company will surely overcome. And don't forget that the Africa strategy, which they are very, very successfully pursuing and very intelligently and strategically pursuing, this can bring incremental margin and incremental revenue from them, which will definitely help the India business or overall business.
All right. Sudeep, with respect to the numbers, what is the kind of growth that you're penciling in? Because, 9 months, they've already done 16,300 crore in terms of revenue and 2,400 in terms of bottom line. How do you think calendar year 24 will end, and how does calendar year 25 look to you?
Well, I'm looking at about 20% kind of EBITDA level growth as far as this company is concerned. As far as calendar year, because they do calendar year accounting. Now, I won't like to hazard a guess as far as first couple of quarters, because there will be margin pressures, A, because of what's happening in consumption demand, B, because of integration of Africa into the overall business and extracting efficiency out of Africa. So first 2 quarters, I won't hazard a guess on the margins, but overall, I think we are expecting about a 20% EBITDA growth.
Okay, Sudeep, we leave it at that. Thank you so much for joining us and giving us your view on Varun Beverages. Of course, we'll have to keep in mind as to how the third quarter earnings come through and what the management is suggesting as we move into the next financial year as well. But thank you so much for your keen insights into this company, Sudeep. All right, there you have it. Well, on that note, we are out of time from this edition of KYC, but don't go anywhere. Lots more lined up. You're watching NDTV Profit.